Let's talk more about what could happen in the markets from here. Now, we are joined by our frequent guest, Paul Schatz, friend of the program, Heritage Capital president. He's joining us from Woodbridge, Connecticut. Paul, it is great to see you. I hope you're doing well. And I'm wondering, as we look at these markets, I know that you, looking back a couple of weeks, are saying perhaps we have indeed seen a bottom here. If you're coming back in, where do you go right now?
And good afternoon. Hope you're staying safe and healthy as well, Julie. So first, yes, at around the lows, I'd said it looks like we're forming a low, but not the low. That was what I looked at the time. You had the most downside momentum. It's like a snowball going downhill. It's the biggest before it hits the bottom. I did not expect the markets to rally as sharply and smartly as they have, but it still does not change my opinion, and everybody has an opinion, obviously, that I don't think this bottom is going to look like the Christmas of 2018. Christmas 2018 was a V. We ripped into the new year. The Fed and Powell pivoted, and we were off to the races in a wonderful 2019. While I think this rally is very impressive, and it has a lot of thrust that you'd normally see at the beginnings of new runs, I don't think the all clear has been sounded in the market, and we're going back to new highs right now. I do see new highs next year and Dow 40,000 after that, but I don't think this year from, let's say, the March 23rd bottom to Christmas is going to be the straight up move. Close your eyes, enjoy. We did see this morning yet another emotional opening. We saw on good news, and I would argue that stocks have come so far so fast. I would not throw new money in today. I'd be patient, pick my spots.
Paul, Dan Roberts here. And let me just say hi from New Canaan, not far from you in Woodbridge. We had the CEO of Northwestern Mutual on the show just a few minutes ago, and he was saying now is not the time to do anything rash and crazy. Keep calm, carry on in terms of investing. And the cynical side of me thought, well, of course, investment advisors are hoping that. And what they're really hoping is, now's not the time to pull your money. And I just wanted to ask you, how many people you guys are hearing from who they're just scared still. And there's so much uncertainty. We don't know what the timing will be. And their first gut reaction is to just pull the money that they do have in the market.
I love the question because now we're talking about retail investors. And I've written about this so often on my blog. This is my 8th rodeo of this kind of market activity. I got in the business, it's almost 32 years ago now. So although the news backdrop is different from crisis to crisis, every crisis I've been through seems like it's the end of the world. We're never going to recover. But markets trade on two things, greed and fear. And we go back and forth. How much money is available to be invested and how quickly people want to invest it. To your point, of course, I've heard from clients, not so much in April, mostly in March, mostly just wanting reassurance. I write so much between social media and our blog and our newsletter. I try to get as much information out as possible. But of course, clients are concerned because they just want to know market's not going to zero. It's not going to take 10 years to recover. And I think that's what investment advisors' jobs are. I don't like to offer platitudes like just stay the course. You're in it for the long term, rah, rah, rah. That's not what people hire me for. You have to be able to add some value during turbulent times, and just telling people stay the course, don't do anything, to me is really not doing your job.
Okay, it's good to see you, Paul, by the way. And my 401k and retirement plans are hoping you are correct. But this seems like, and I hate the quote, this time is different because it never is. But this time is different. We're having demand destruction in a way that, for instance, I keep talking about office space the last hour. Really, I mean, the rents and the rent payments on bonds that are tied to offices, that's just not going to come back like it was going into this recession.
That's right. It's never different. Human nature hasn't changed in 100 or 1,000 years. Now, to your point about office space, let's remember, after 9/11, nobody was going to fly. Nobody was going to rent in a top floor of a skyscraper. No one was going to build skyscrapers. Everyone's moving to northern New England. 10 years later, Everyone's in Manhattan. They're building the highest of high buildings. Rents on the top floors are outrageous again. Human behavior has changed, but I'll say the same thing. It's temporary, whether it's 2 years or 5 years, it's going to change in the short term. We are seeing dislocations. We're going to continue to see dislocations. And you mentioned commercial real estate and the mall space. Similar to 9/11, we also saw things like this happen. But if you want to look intermediate term, 2 to 5 years, yes, big changes. You want to look out in the long term, the smartest people on earth are all collectively working towards one goal, and we'll get through this. But of course, markets continue to evolve. Jobs that were here 2 months ago aren't coming back, but new companies are being formed right now. People in their garages are finding all new ideas. So it's crazy to believe that we're not going to emerge in the mid-2020s or later much stronger, much bigger, and much more resilient.
I like that. I like that hopeful tone, although I know there are some naysayers out there who are still looking at some kind of permanent change. But if what you say is true and you're a long-term investor, then that implies you should be buying things that when things return to normal human behavior that we have seen over the past several years, just as they did over 9/11, that those things are going to be benefiting. Things like travel, for example, things like restaurant chains, perhaps. Is that how people should be thinking about it?
So what I did in the middle of March, I created my have and my have not list. And the have list are companies that got crushed, not the Costco's and the Walmarts that people ran to, but companies that got crushed just because they were in the S&P 500 or a given index. And then I put the have nots. The have nots are, restaurants, cruises, airlines, even though the airlines got rescued, my sense is, and my argument's going to be, they're going to be laggards after this initial pop is over. But there's plenty of opportunities in companies and in sectors that have not ripped already. The individual investors, we may all be long term, but the short term pain definitely impacts us emotionally. Use the opportunities. The panic may be over in grand form, but I'll argue that we're going to see more panic days in the next 4 to 6 weeks. So if you always wanted to own, I love Alibaba. If you've always wanted to own Alibaba, you'll get an opportunity. Ecolab, which makes products in sanitizing and health. There's so many good ideas. I wouldn't run to a Dave & Buster's or the cruise industry or things that I think are going to lag for years to come. But my gosh, 80% of the economy and the market is still going to be moving and probably getting their act together. And I'll add one more point. Similar to 2008, where we saw the financial crisis and then the economic crisis, I would argue today we have seen the health crisis, and the economic part of the challenging period is here to maybe the end of June, early July. People should separate that out.
All right. Well, still some hopefulness in there, Paul Schatz. Thank you for that. Good to see you. Paul Schatz is the president of Heritage Capital. Appreciate it.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.